All right. Hello, everybody. Welcome to Real Expert. I'm Toby Shifsky, your host, and this is Kaplan Real Estate Education. We're bringing you today an expert who is actually very familiar to me and very familiar to some of you who have had him as an instructor and faculty at Kaplan. Our topic today is post-pandemic, the new challenges in mortgage. And our expert is none other than Jerry Anderson. Jerry, welcome today.
Thanks, Toby. Happy to be here.
Absolutely. So if you don't know, I'm gonna give Jerry's bio in just a second. And but Jerry has been an instructor at Kaplan for, boy, what is it, since 1999? Jerry, it might be.
Yeah, it has been, Toby. Yes.
Yeah. And Jerry has taught tens of thousands of real estate agents, everything from mortgage and finance to licensing education to continuing education, and is really just one of our expert faculty that we have at Kaplan. And today we're going to hit pretty fast, really post-pandemic, new challenges in mortgage, interest rates that are still at an all-time low, qualifying seems to be loosening up a little bit. Appraisals seem to be flying in fact, maybe not even appraisals on new financing. And we're going to cover the gamut today, and we're going to go really fast. But let me make sure I introduce Jerry so that you guys can all understand kind of the level of professionalism he brings. Jerry started in the mortgage business as a loan officer in 1983 and became a branch manager in 1985. And then he went on his own, struck out, and started his own firm in 1991 and oversaw that operation until 2008. I think we all understand what happened in 2005, 6, 7, and then 8. A lot of people kind of struggled at that point. But during that time, what Jerry brought is Jerry also obtained his real estate license during that time. So he goes from mortgage to real estate. We call him the perfect storm because you get the mortgage side and you get the real estate side, and you know the deal from the beginning to the end. And that's the expertise I love about Jerry. And in that time, Jerry obtained his real estate license and started a real estate brokerage and a title company. So how about that?
Perfect.
Real estate, mortgage, title. Really was the alpha to the omega, right, Jerry?
That was the plan. Yes.
Had over 60 people on his staff, so he ran a business, understands it, and then due to the economic conditions of 2008, shut down all 3 businesses. And Jerry's been working as a mortgage loan originator and real estate broker advisor since that time. And Jerry specializes now in reverse mortgages, kind of that next level of mortgages since 2017, assisting homeowners and home buyers age 62 plus with their home loan needs. So, and then lastly, once again, Jerry's been an instructor at Kaplan since 1999 and is truly an expert in his field. Let's go ahead and jump in, Jerry. We have a lot to cover. And so I'm going to go ahead and put our videos up here full straight on so everybody can see.
Oh, boy. Here we go.
A little closer. Yeah, a little bit bigger.
Here we go. Make sure my teeth are in. Here we go.
It's at times like this, you don't want high definition. So, and that's for me for sure. Here's what I want to do. I want to poll our listeners. I think we have, almost 90 people in already. I want to know who's on, and Jerry, so we can kind of gear this towards who's actually with us and participating today. I'm going to throw up a poll question. Everybody here, all the attendees, you're going to get to play along. I want you to answer kind of this poll question if you could. Help us out. It's all anonymous. Nobody's going to see your name tied to it, but we are going to see the results, and I'll share the results so everybody here knows kind of who's on this. And the first question is, how many years have you been in the real estate business? If you would, play along so we can kind of gauge who's all here and we can kind of gear the presentation towards that, because we want to make sure everybody gets some nuggets out of this, right? So the answers are, number 1 day to 3 years. You're brand new to 3 years. Please go ahead and hit that result. 4 to 9 years, 10 to 19 years, 20 years plus. Jerry and I, 20 years plus. We're good to go. And then how about this? Not even licensed yet. Look at this. I love it. So everybody should know we open this up to new students too. People going through licensing classes right now, they want to be a part of it. They want to understand the industry. And these real expert seminars are a great way for them to kind of get 30 minutes of here's what's happening right now. So go ahead. I'm going to go ahead and close this poll in 3, 2, 1, 0. I'm going to end the poll. I'm going to share the results. All right. Can everybody see those results? I think we got it down. All right, here we go. I think we're sharing results with everybody. And I got 1 to 3 years. I got 16 people, 24%. So a quarter of the people, 4 to 9 years, 10%, 10 to 19, about 10%, 20 plus, about 12%. And then I'm not even licensed yet. Look at this. 43% of the people on it. Good for you. My goodness. That's amazing. All right. Well, we're going to have to share some wisdom, Jerry. We got a wide range of people here. Yes. So, and I think we got a topic that just about all of you are going to get something out of this today. And some of you are going to have some questions. I'm going to go ahead and put Jerry's information up again at the end of this, right? Jerry's email. He's open for questions. He's a pro. If you have any thoughts or questions, go ahead and email Jerry afterwards.
Absolutely.
All right. All right, let's go ahead and jump in. And the way this works is I'm going to interview you, and we're going to talk about questions, and I'm going to kind of play the role of our students, of our listeners here, and we're going to kind of go pretty fast and pretty quick. So let's go ahead and start. I'm going to ask you right off the bat, what are the key game changers, that you're observing in the real estate market today? What are the key game changers?
The home buyers, Toby. It's right now they're driving the market because we have such a pent-up demand of buyers ready to buy a home. Also, people that are in a home will want to move up to the next home because of the low interest rates. The home buyers are really making the market overall.
So it's funny because everybody says, well, who are these home buyers and where are they coming from? Who are the home buyers?
Well, take it. No offense to you, gang. I use the term millennials, and the millennial generation, I'm going to give you the big picture, is people between the ages of 22 and 40. For the last several years and right up to this year, all right, they've really been the major percentage of buyers in the marketplace, running right around 36 to as high as 38% of the marketplace. And there's 72 point something million people between the age of 22 and 40. Only less than half of those, Toby, I think the number is around 47%, actually own a home today. So there's 30-some million millennials that are ready. They're qualified to buy a home, absolutely, and they want to buy. Yeah.
So we've heard this, and I know we talk about it. Everybody talks about it. Everybody's millennial. But the truth is, it is millennial.
Yes, I know. Again, no offense. I got five of them. I got 5 millennial kids, so I know. Yeah.
You got 5. Oh my gosh. So these millennials, right? That's that 22 to 40 you said, I think is what it is. And they're buying homes, and they're coming out of their parents' basements and they're buying homes. Yes. Why are they buying homes now? What's driving this?
Because the cost of the housing, when I say the cost of housing, the cost of ownership is at one of its most advantageous levels versus renting in history. Okay. Because of the low interest rates and the advantages of the financing that's available, they can get in and they can own a home, and they're seeing that, gee, I'm paying $1,500 a month in rent. Whether you live alone or you got a partner that you're living with, I can own a very nice home, a 3-bedroom, 2-bath home for the same amount of money. And it's an investment. It's something that's been built for the future.
Right. So they want to, first off, they make the decision, millennials. I got to move out of the house. Yeah, right. I've been back home. I've been living with mom and dad, whatever. And there's 72 million of them total. Less than half of them own a home already. So you got another 36 million.
36 million total. Yes.
Sitting there going, what am I going to do? I'm either going to rent because I'm moving out of my mom and dad's place. And we're going to find later that it does affect the rental market too. Yeah. And it's bolstering it, right? Correct. So you got these millennials that are moving out, and then they're comparing, and they're going, well, I could either rent or I could buy, and money's cheap right now.
Yes.
Why is it so? Compare it. So because I think we're going to find that this demand is really all about. It's not even about the price of the homes, because what are we seeing?
No, it's not about the price. No.
Yeah. So tell me about that. Why is it? What is it about then? If it's not about the price.
Great question, Toby. And I've shared this with many real estate agents, for really probably more than 10 years now, is that, when you think about the price of housing, if you're your starter level homes at $200,000 or it's at $300,000 or $400,000, that's a number. The key is what does the home cost me to own per month? And if the cost of owning is at or around a third of the person's gross monthly income, they can own. Okay. And rents now have risen to the level where it's at 30 to 35% of a tenant or the consumer's income. Income is absolutely.
So it's about equal.
So absolutely. So the rates have went down. Yeah. Granted, prices have rose, but overall, the cost of owning is very favorable.
Very favorable. So, and I would imagine that if that changes, right? So if the interest rates go up, or if home prices go too high up, that changes.
Yeah. If if you have significant price increases, like in certain markets, and I'll talk about United States, we shared earlier, it's about like Idaho, California, where they've had a 20, 30, 40% increase in the last 12 to 24 months. That's becoming somewhat unaffordable, but people are still going there. Okay. And I don't know if we have time today to talk about that. I don't think we will. Yeah. Overall, okay, they're able to get in and own, based upon the let's say, now back to the question, is the amount of increase or appreciation in real estate has been very favorable, and it should continue to do so because of the pent-up demand. I'll just stop right there.
The pig through the python, right? The
pig through the python, exactly.
Pushing hard, and they want a place, and interest rates are low. Even though prices are going up significantly, 10%.
It's still affordable.
Yeah, it's still affordable. Yes. And if that equation changes, right? Well, there's a couple other things too. So, we talk about lending, and we talk about money, and is it harder or easier for these millennials to get a loan today?
Well, because of technology, the advancement of technology in mortgage lending over the last 20 to 30 years, it's never been easier for a consumer to be able to learn about a home loan, apply for a home loan, and get pre-approved than ever before. A person today can get pre-approved on their smartphone in as less than 20 minutes. They actually could get a certificate to go out, meet with a real estate professional and go out and make an offer on a house. Now, there's conditions, of course, that need to be met, but the pre-approval process of obtaining a loan is very easy.
So this for our friends on here who've been in the business, 20 plus years. You remember the day when you literally had to show up with the dossier, right? And they take a little, they stick you, but they take your blood, they check,
urine sample, blood sample.
Yeah, blood sample, 7 years of, tax returns, and that's all changed, right?
Correct.
I mean, the whole financing process. We talk about, fintech, and it's true. It's revolutionized how the home mortgage is qualified for right now. The home mortgage loan is qualified for. And like you said, in as little as 20 minutes, a home buyer can go online, they can apply. Now, just make sure we understand, they can get a pre-approval letter, which is generally what you really need in order to make a bona fide offer on a home, if you have to finance, if you have to have a mortgage. And what percent of homes do you think, Jerry, are still financed today?
Well, just some numbers, some trivia, if you all want to write this down, is that last year, so 2020, 83% of the homes that were sold had some type of financing, whether it was conventional, FHA, VA, or jumbo private type financing. Out of the 83%, 80% of those home buyers obtained a conventional type loan. So it's a
conventional number one then.
Conventional number, it's huge, because FHA, it runs in second place, and I think FHA was around 30%.
Got it.
The FHA, then VA was like 10, 11%, and then jumbo private financing makes up the difference.
All right. So we get 70, 83%. So 4 out of 5 homes involved.
Exactly. They're going to be involved in getting financing. Yes.
Getting some sort of financing. So now, in order to actually write a purchase agreement, right, you get a approval letter, like I'm approved for my financing, and that's not the same as fully approved, though, right? I mean,
correct. Borrower and a home buyer is the same thing. Okay, same person or persons. They still, the home buyer does still have to provide evidence of what they put down as their income and their assets. So they're going to need to provide a W-2 and a pay stub. An asset side, normally it's going to be just 2 months of their bank statement showing where they have the money to be able to make the down payment.
Got it.
And then the lender orders credit and appraisal.
But in order to get a pre-approval letter, as little as 20 minutes.
Correct.
Online. Done. And you take that with your real estate agent. You go out and look at homes. You can do a purchase agreement, and then you can enter into some sort of maybe a financing contingency to make sure you get all those W-2s and all that stuff turned in, right?
Okay. Correct.
So let me ask you a question. Who is buying, selling, or holding? I think we're talking about that right now. We're talking about the millennials, and we're talking about how many of them are coming through. So let me do this. I'm going to ask one more poll question. This should be review for everybody, but I want to make sure we are absolutely solid on who is moving, kind of this market right now. Because what we're going to find out is we have a housing shortage, and this housing shortage isn't going away really anytime soon. This housing shortage is kind of going to go on for a while, Jerry, right? I mean, we're
3 to 5 years. Absolutely.
Yeah, another 3 to 5 years. So how many millennials are there in the U.S.? Go ahead and take a whack at that, everybody. 22 million, 42 million, 72 million, or 102 million. How many millennials? And these are the people age, what are they born? I'll tell you when they're born. They're born 1981 to 1996. 1981 to 1996. In that range. Go ahead and answer it up. We'll give it 3, 2, 1, 0, and boom, I'm done. Here we go. I'm going to share all the results. All right, look at that. You know what? 66% of you had it right. I should have stopped 4 seconds ago because it was like 80% had it right. And then it bombed in at the very end. So 72 million, 72.1 million millennials. That's the latest census. And then, the next thing I'd ask you, if I was going to ask another poll, I am going to ask another poll. So how about this? Everybody, we're going to go back to back because I think you need to know this. What percentage of millennials actually already own a home? Because the answer is 72 million. But what percentage of them actually own a home? Ooh, we got two clear front runners. We got people. They're vying. There's two of them. I'm going to say right now, it's the poll is showing either 28% or 48%. I can tell you the right answer is in there. It's either 28% or 48%. So you guys do your best. Oh, we are deadlocked, dead even. I should end the poll right there. How funny is that? So 72 million millennials, and what percentage of them already own their own home? 3, 2, 1, 0. I'm going to end. Somebody bombed one in at the very end at 68%. The answer is 48%. 48%. So it's like 47.9. So we're going to say 48% of millennials own their own home already, which means there's over 36 million of them who don't own a home. Now, not everybody's going to home. Jerry, if you were to say, and I think you know this answer, what percentage of millennials, that entire population, will never own a home?
The survey from last year told me said 1 out of 5.
So 20% will never own a home.
Correct. They have no intention of ever owning a home. They're always going to rent.
Yeah. So that's like 14 million of 72 million. So
yeah, they're going to be about 30 million buyers right now.
Yeah. So there's a pile.
That's a pile.
And there's millennials who already own who are moving up. Also.
Correct.
Because they have
the older generation millennials.
Equity flying up. So they got a nice little pile of money and equity in their house, and they are ready to go. How about this? Let me see. We got a couple questions coming in. How about the process for self-employed, though? Jerry, real quick. If you're self-employed, how is that different in financing today? Is it easier or is it harder?
Well, post-pandemic now, so because we're outside of this, as of right now, the underwriting guidelines still require that a self-employed borrower, also a person that's on like commission, so their income fluctuates from month to month, week to week, whatever it is, that the buyer is going to have to provide evidence of the stability of their income. So if during the pandemic they were still employed, there was, business was still good, no qualifying issues. But if they were furloughed, they just took time off, whatever it is, they're going to have to show that they're back in business or and that the income is at what it was to pre-pandemic. You'll probably see that guideline change here, by the way, in the next 60 to 90 days. And which should make it easier.
It'll make it easier.
Yeah.
Okay.
And the
All right.
easier is documentation.
That's just the documentation.
Correct.
Got it.
Yep.
All right. So I got a question for you. As the old song goes, should I, or homeowners are asking, should I stay or should I go?
Should I stay or should I go?
Yeah,
well,
I got a pile of people. What do? We got 3 years of appreciation, of ginormous run on appreciation, right?
Yes.
We got 8%, 10%, 11% over the last 3 years. That's a lot, and for a lot of people. In fact,
many Americans today, Toby, their overall wealth is in their house now. That's a statistic. But they're looking, okay, I like the home I'm in, so and it costs more to get better than what I've got. So a lot of people, especially the older millennial or Gen Xer, Gen Y, Gen Y, and then to the baby boomers, is that they're 88% of those people right now are considering staying in their home. So they're looking at what the benefits are of remodeling versus moving.
So 88% of Gen X and boomers want to stay in their home.
Correct.
Right? Is that what you said? So
Correct.
A lot of people want to stay. They don't really want to move right now, but they need changes. And you're saying that you should be prepared for that response if you're an agent.
As a real estate professional, absolutely. You should have a remodeling contractor or contractors. As you know, I'm a real estate broker and my wife sells real estate, and we have a team, and we're involved with, I'm involved with several different agents in different aspects of the business. All of my agents that I work with are on our team. We have electricians, we have framers, we have full remodeling service providers.
And why would I do that? Why would I say, no, you should move? Why wouldn't they say that? And I should be saying, yeah, all right, well, here's what you do. Here's a resource for you to improve it. Why would I do that as opposed to say, you really should sell now?
Because update the house now to what the consumer wants, the type of lifestyle that we've now become accustomed to. Because 2 or 3 years from now, they're going to move. And then it's going to give you the opportunity to get that listing at a future date. And hopefully that
home's going
to have absolutely.
And it's worth more.
It's worth more. Exactly. Yeah.
And they're probably happier because they got a couple years and they did what they really wanted to do. So good advice. Solid. Let's move on. I'm gonna move into. I think it's very interesting what's happening to financing, and what's happening. How has obtaining financing changed for buyers today? We've touched on it a little bit, but I think there's more to unpack here. Tell me what's really changed, because a lot of people remember it differently than what it's really happening right now.
Mm-hmm. Well, as I share with you, the process of obtaining the financing has become very simplified because of the data that Fannie Mae and Freddie Mac, the secondary market, the lenders that make the decisions to approve the loans, they have assembled so much data over the last 20 to 25 years that through artificial intelligence and algorithms, they now can make that lending decision without having to go through all the gyrations that you used to have to do. And so what they're looking at is credit first. Okay. Now, credit scores are so important. And in today's world, if a home buyer has a credit score, and this is a key, you may want to write this down, gang. If you have a credit score of 740 or higher, you are absolutely eligible to buy a home today. All right. That, as I used to say, you can dance on a loan officer's desk. But in the United States right now, the average consumer's credit score is running around 700. So that's where they start. And if a buyer has a credit score at 700 plus, it's very likely that they're going to get very favorable financing terms to be able to purchase a home. Okay.
Got it. So credit score is key. And what was that number again? You got to be over
740 or higher. You're going to get the most favorable rates and terms. And right now, just for reference, if you're over 740, you should be able to get an interest rate in the high twos. So 2.75% to 3%. If you're around 700 credit score today, you're probably in that 3% range, or maybe 3 1/8 or 3 1/4. If your score is in the 600s, and by the way, agents, please pay. And those of you new to the business, even if your credit score is in the 600s, you're still eligible for financing today, meaning in 2021. There's more documentation requirements that you need to do. But back to, you don't need to have 2 years on the same job anymore. You don't need to show all sorts of assets like you used to have. Yeah. Now they're looking at, if you've got employment, you got good credit, you can buy a house.
Well, what about even, this is part for those people who've been in the business a long time, understand this. What about it even having to have an appraisal?
That's another thing that's come about. And for those of you that actively sell real estate, you know what I'm talking about, is that if a home buyer is well qualified, and I'll say well qualified with a credit score of 700 or higher, and they're putting 10 to 20% down, in many cases, and by the way, listing agent, buyer's agent, either side of the table, be aware, is that the lender for the buyer is not going to require an appraisal. They're doing what's called a property inspection waiver. This comes right from Fannie or Freddie. So there's a savings to the buyer of $500-600 for the appraisal, but that process, the going through the gyration appraisal, in many cases of that situation, are not required. And again, back to 80% of buyers are getting conventional financing. So it's happening more often than most people realize.
Shrinking the time frame for closing, shrinking
absolutely
the
2 to 3 weeks
for not getting an appraisal to actually work out with the numbers, right? I mean, so rising home prices, that's beneficial. If the pricings keep going up, sometimes when you don't get an appraisal that works, it creates a lot of clunkiness in the deal, and even some deals fall apart. But without actually needing an appraisal, a lot faster, a lot quicker, and removes hurdles and friction, right?
Correct.
Got it. So mortgage qualifying, simpler, easier, and credit scores everything. Right? I mean, you're
credit
seeing
scores everything. Absolutely. Yes.
Credit scores everything. Now, clearly, you're going to have to demonstrate that you got some cash reserves, you got some stuff. Like you used to say, 222, I think, was what it used to be, right? How's that go again?
2 years on a job, 2 years credit history, and 2 months cash in the bank after closing.
Yeah, pretty much. 2
years of residency history too, meaning show that you've rented or you've owned in the past.
Got it.
You don't need to do that anymore.
That's still a winner, but really you better have a credit score, because if you don't have the credit score, you don't have anything, right?
Yeah, pretty much, Toby. Yep.
Yeah, pretty much. All right, so I think we've covered what does it take to get a mortgage, we hear about a lot of housing shortages. Let me ask you a question. What's going on in new construction? Because we have all these millennials coming through. In fact, I see somebody put a question through. Stu, I see your question.
Yeah, I was just reading it as well.
Yeah, there's a recent poll, in the newspapers that claims 60% of millennials who presently own a home have buyer's regret. I really wonder how many people who just bought a home actually have buyer's regret normally, not just millennials, but anybody. But are you seeing the data that validates this claim? I'm not seeing that.
No, I've not.
No.
So I just said, I smiled when I read Stu's question or comment, and I have not seen that at all. Now, here's the scoop, though. New home buyers, again, 38% of the market. Millennials have never owned a home before. They're first-time buyers. Yeah. They weren't physically or mentally prepared to own a home. And so the regret or the remorse might be because they got in and went, oh my God, I got to fix a water heater. I got to mow the lawn. I got to paint this. And, no offense, again, I got 5 millennial kids, but your generation doesn't do the things to homes that that baby boomers or Gen Xers have done.
Yeah, okay? Basically built half the home.
Exactly. We painted our way in. We laid the sod, the whole 9 yards. Today, you say to a 30-year-old, "Hey, look at the extensive landscaping." They look at you, go, "God, can I put all rock down? I don't want to mow anything." All
right. So. Yeah. So good questions, Stu. I'm going to keep moving though here. So the housing shortage. We got all these millennials coming through. It's like a pig through a python. Financing is low, right? I mean, really low. And they want to buy or they want to rent even too. Tell us, what do we hear about the housing shortage and what's going on with new construction?
Well, here's the numbers as of last week, because I follow this closely because I do a lot of new construction transactions. Last year, there was a shortage, meaning the demand of 2.5 million units. Okay. And last year, there was 991,000 homes built in the United States. So think about that. And that most years, I just got here, they're talking about going into the future. This is from Mortgage Bankers Association, by the way.
Very good resource, everybody. MBA.
The MBA, absolutely. We're talking about housing starts for this year should be about 1.134 million, say 1.1 million this year. Okay. Again, there's a shortage of 2.5 million. They can only build 1.1 million. That's it. And then they're talking about 2022 is 1.16 million, and 2023 again they're going up to 1.2 million. So new construction future is looking very robust. And as somebody made a comment about the cost of lumber, those things, that's now starting to correct itself. If you've been following the market, lumber futures have improved in the last couple of months.
We watch it go up to $1,200 a board foot, from 400, it's back down to about 800. Still double, but it's coming down fast. Lumber costs are coming down really fast as people just put off projects and waited for that. So building, new construction, like I said, if I was starting again, I would be thinking about being a contractor and being in this business.
Oh, absolutely.
We have a housing shortage in the United States right now, given interest rates. Given the fact that people are moving out and they're moving on their own, and a lot of them are finally figuring out, Stu, it's an interesting question you asked about the millennials, and they got regret. They probably don't have a lot of regret because they're into money already if they've owned the home for a year or 2 years, and the appreciation that they've made on that asset is way outstripping probably any of their regrets at this point. But in new construction, right, the demand has outstripped the pace of us building it, and the fact of the matter is that makes resale demand even higher, right?
Correct.
Because we just don't have enough units. Period. We just don't. And now, depending on where you're at, of course, I mean, there's some areas that are still a little bit distressed, but in the most part, if there's people moving somewhere, the demand is high, and that keeps on going. So I got another question for you, and it has to do with this new construction, aging in place and auxiliary dwellings. I want to make sure we hit on this because new construction is about fitting it to the right size for what you need. There's another part of new construction, though, which is about fitting families or multiple units on a single piece of property. What's happened in urban and zoning and even residential areas across the country that has actually changed the mortgage industry a bit?
Absolutely changes.
Tell me about this. I think this is important for people to hear.
So for everybody that understands, in most cases, up until several years ago, a lender, or we could only make a mortgage on one specific unit on a home. So it'd be a single family home on a lot, okay? Because of the cultural changes throughout the United States and the influx of different races and ethnicities, it is very common for multi-generations, meaning grandpa, grandma are living with the kids and the grandkids all in one particular home. Right. While Fannie and Freddie, and then now also
Fannie Mae, Freddie Mae,
I'm sorry, I didn't get the mortgage thing. So the secondary market that tells lenders, the guidelines on how we can make loans, as well as various municipalities, and Toby referred to urban. I'll bring up, for example, I'm located in this, the Twin Cities area. The city of Minneapolis last year changed their zoning where you could have up to 3 living units on one single family site. And you can now get financing on that. So it could be one traditional 30-year fixed rate loan at 3%, for an example, with 3%, 5%, 20% or more down, and have 3 generations living in the same house. And what's neat is that the loan programs don't require all of the residents, meaning the people living in a home, to actually be on the deed or have any physical, legal title to the property. So it could be just one or two. Mom and dad, for example, own the house.
I want to build a granny flat.
And that's what just say, Toby, was the next one is flat. Right. Besides the 3, or for example, 2, what we used to call them mother-in-law apartments. For those of you that have been around for 20 years or longer, it was finished in the lower level where it had a kitchen, a bath, and a bedroom, and that's what you put the mother-in-law. Okay, well, that is gone now today. It's called an additional dwelling unit, auxiliary dwelling unit. You may also hear the term ADU, and depending upon where we are, and we've got people from all over the world, actually, I see on our roster, but, in the Southwest, for example, in the Phoenix market or Vegas market, I can't speak so much for California, but they have what I used to call, because I had a home down there in Phoenix, is a casita. All right, which is a separate, it's like its own separate little apartment, separate dwelling unit. You now can get financing on it, just like you would for a traditional loan. One mortgage for the whole one property on one legal.
For one legal description.
Correct.
And if you had the 3 units or 2 units or the casita in the house, you get one mortgage on the whole thing. Because I remember times when you had a mother-in-law apartment down in the basement. right, on a house, and you tried to get financing,
you had to tear it out.
You got to tear that out.
Yeah,
you can't have multiple living units in your. That's all changed.
That's huge.
Yeah, and what's the guideline? If somebody wants to know, like, is this going to be able to qualify for financing today? What's a simple guideline? I think you told me it was something about the zoning, or what was it? It has to adhere to zoning and ordinances.
That's correct. It's got to be it's got to be in compliance to the community development that it's in. Yeah, there's multiple units allowed.
If the are allowed, if the
absolutely
flats, if the multiple units are allowed, it qualifies.
And if the person's going to rent out that auxiliary dwelling unit, you can possibly use the rent and qualifying.
Oh,
that's also a benefit.
Jerry, you are a wealth of knowledge. I wish we had more time, but we try to keep these short. Everybody, thank you for listening today. I'm going to go ahead and I'm going to put up our closing screen. It's going to have Jerry's email address on it. He is a wealth of information.
Please email me with your questions that we didn't answer if you need them.
Yeah, if you have some questions that didn't get answered, you can ask Jerry and he will answer them. I want to thank everybody for being here. This has been Real Expert, and take care, and you have a great day, everybody. Thank you.